Fibonacci retracement are among the most accurate of trading signals, yet they're widely underutilized. This is because they can be difficult to spot and tedious to validate. But the indicator I'm about to show you in this video will solve all these problems. It will automatically spot the best Fibonacci retracement in the price action and evaluate them so that you can easily differentiate weak support and resistance from strong ones. I will also give you the best strategy with this indicator that you can follow right away and make good and consistent profits. So make sure you stick to the end, as I will also be showing the most profitable method to use this indicator. Do not forget to smash the like button and subscribe, as it motivates us on the hunt for the Holy Grail. Okay guys, for today's video, we decided to do something different. We got a mail on how to use the Fibonacci retracement for day trading. Now this strategy was developed just to show what could work when using the Fibonacci indicator. This indicator are horizontal lines that indicates where support and resistance are likely to occur. Each level is associated with a percentage. The percentage is how much of prior move the price has retraced. Now please note that this strategy is half complete, as if you must use the Fibonacci retracement, you need to combine a lot more indicators, like volume indicator, momentum indicator, trend identifier, and so on to determine what works perfectly well in the market. You are dealing with areas of support and resistance, so you need more indicators to understand what is actually going to happen on financial market. But for this video, I will just be going over the basics of what we used. You can as well try other methods. Now a lot of you know that when people tend to draw the Fibonacci retracement line, they tend to make a lot of mistakes. Using recent swing high and lows might not give you the best support and resistance Fibonacci levels. That's why we decided to use the auto Fibonacci retracement. And for this particular indicator, bring up the indicator panel, then search for the auto fib. This one right here by the Jan Giese. This indicator automatically draws line of Fibonacci on chart. On the settings, you can also choose how many candles to determine your Fibonacci levels, and the indicator would draw those lines for you based on your input. But we would leave these at a default settings. Now for the purpose of this video, we are on the United States dollar Japanese yen. And this is the 1 hour time frame. As we all know, most profits are made on trending market. And for this strategy, we would be adding a baseline indicator to the chart to make you better understand the strategy. When you bring up the indicator panel, I want you to search for the chandelier stop by Pip Charlie. This indicator changes color whenever a new direction in the market tends to happen, as it takes the ATR value to consideration when plotting its lines. When we see the green lines, we are on a bullish trend, and when we see the purple lines, then we are on a bearish trend. Now for this strategy, it's this easy. Since the fib levels are areas of support and resistance, we tend to notice price action retest these levels before continuation on its trend or possible reversal. So using this levels as area of stop loss could lead to a lot of losses when trading. That is why we applied the chandelier stop to better identify good stop loss points. For this strategy, we would want to see the chandelier stop on green as our first confirmation. Then we would have to wait till we see price action close above the next level on the fib indicator. We would therefore enter a buy position at the peak of the trigger candlestick. Stop loss at chandelier and take profit at any values of your choice. But for this video, let's maintain the 2 times risk take profit value. Please note that once you take the first trade after the conditions have been met, we would not take any other trade till we see a change in color on the chandelier stop. This strategy tends to work best on trending market. And I will be showing you how to go about it, as you do not need any other indicator for that. And I would recommend the strategy for beginners who only tend to trade trends, as it is easy and very profitable if done right. Let's now go over some few examples as we explain the strategy. So here was a valid sell trade, as the chandelier is in purple, but we waited for the close below the next fib level. And we see we got it at the next candlestick. But as we can see, if we placed a sell stop order at the lows of this candlestick, the trade wouldn't have been triggered. as price action did not trigger the trade. Now this next trade was also valid, as we had the chandelier on green and we had our cross above next level at this point. If we open trade here and set our stop loss at the chandelier stop, then take profit should be 2 times the risk. We see we would have taken our profit here at this candlestick. Now this next signal was also valid, as we got our chandelier color change at this point. And when we had this, we had our candlestick close below the Fibonacci at this level. If we placed a trade at the lows of this candlestick, our trade would have not been triggered also, as the lows of this candlestick is at 132.556. And the lows of next candlestick is at 132.559. So we see we would still be safe without any loss. But take note that some brokers tend to use market slippage and spread to trigger this type of trades. Now for the next trade, we see that we got our chandelier on green at this point, and we had the break of Fibonacci level at this point. We would therefore enter our trade at this candlestick. Stop loss at chandelier stop and take profit, 2 times the risk. And we see it was successful. Notice how both indicators are profitable, as a regular indicator would give signal somewhere here that could lead to a loss. But combining these two indicators tend to give an edge in the market. Now let me quickly go over the best part of this strategy, as this is the best way to ride trending markets. Okay guys, as we all know that these levels of Fibonacci are support and resistance for a given period of time. When we notice change in straight line, then we could say that a new highs or low is being formed within the given time period. Now for the best part of this strategy, we would want to see price action at the high zone of the Fibonacci. Now what I want you to hunt for is when you notice a change in Fibonacci levels adjusting upwards. This shows strong bullish trade kicking in. Now, when such adjustment is made, we tend to open trade at the highs of the candlestick. Stop loss remains on the chandelier while take profit at 2 times the risk. And we see it was successful. Please note that we would only be taking another trade after we see a change in color on the chandelier stop. Now let's quickly go over a few trades. And we see we had all our 3 trades won. Notice how this strategy prevented us from taking sell trades during the bullish momentum. Please note that exactly the opposite is true for a short trade. Only that this time, it happened on the low zones of the Fibonacci indicator. Make sure to try these out and also backtest this strategy with other indicators to find more edge on the market as well as different time frame. So because of time, I guess we would be stopping here. Please don't forget to also check the spreadsheet to back tested strategies on this channel, as it would help you become more profitable in the financial market. And that's it for today guys. Thanks for watching and see you in the next one.